Kerry Craig from JP Morgan, welcome to the Alternative Symposium.
Thanks for having me.
First question for you today is, what are the most powerful trends you're seeing in global markets?
I think the most powerful long-term trend that's going to come through, obviously, is around climate change and how we progress to a world of net zero. You're already seeing it come through in terms of how commodity prices are behaving and also how consumers are behaving in types of goods they want. I think investors really need to understand how companies are addressing that and how they can take advantage of it.
What should investors be most concerned about and most positive about in the year ahead?
I'm going to start with the positives. I think the most positive thing people could be looking at this year is that consumers have been remarkably resilient and willing to spend. And that's important when, say, the Australian economy, for example, is 55% household consumption. That's what's going to drive growth. The second thing is that this cycle has started off with companies willing to spend. CapEx levels are at very high, and you'll actually see that start to increase productivity, and that's really going to offset a lot of the concerns, which is the biggest risk for the year, around rising interest rates, and also how inflation might actually perform in this cycle compared to last ones.
And the biggest risks?
It's definitely around an over-aggressive central bank that starts to hike too much in terms of all the leverage that's in the Australian economy, and also that inflation pressure doesn't ease back in the way we'd expect it to. That's obviously going to start to impinge on discretionary incomes and also create a very different dynamic if we think about how portfolios will behave in terms of inflation hedging.
There's a bit of a riff, but should we be worried about the Ukraine and Russia?
I think when it comes to armed conflict, there's a couple of things to remember. The first is that they are very unpredictable. The second is that they're not unprecedented. Obviously, we've had lots of armed conflict over the last centuries, and our takeaway really is that unless there's some mechanism that translates to the economy, such as oil, which there is in this case, the risks in the market are actually pretty low, and we've seen them come back. The good thing about, well, I wouldn't say the good thing, some of the positive light we can take away from Ukraine and what's happening with the oil price is that people are less just reliant on oil than they have been in the past. It could have an effect if we think about inflation, but it probably won't have the same effect, say, as we saw in the 1970s when the oil price surged on the back of armed conflict in that period.